Question 5 says, calculate the taxable income for Jacob Pillay for the period after his immigration. So that's 1 December 2022 to 28 Feb 23. Provide reasons for amounts which are not subject to tax. Ignore any VAT consequences. Now again, let's quickly just remind ourselves what happened here. He became a non-resident on the 1st of December. So when he's a non-resident, he only gets taxed on income from a South African source. So again, we go back. We have to start at the trust to go and see all of his income. So you'll recall now that we didn't, in the previous question, discuss that 90,000, because that 90,000 of local dividends that he received from the trust was received on the 20th of January 2023. So that's in the period we're looking at now. So he received local dividends and he's a non-resident. Now that is from a South African source, but he received it from a trust where there was a donor, Carl, and Section 7 would have applied. Section 7.8 applied, if you remember. So Carl was taxed on the 90,000. So you would basically indicate that in your required. As you can see, there's no effect. Right, then the 675 over there. Remember, we said he's entitled to 50% of the amount from the 1st of December till 28th of February. So that's 700,000. This is from a South African source. It is from a trust, but there was no donor here because it came from his grandfather's last will and testament. So he will be taxed on it. Then the foreign dividends, right? The 147,000 was received on the 20th of December. So it's foreign dividends earned by a non-resident. That means it's not from a South African source. So no tax effect. Local interest. So you remember we said he's a non-resident for 90 days. So 21250 times 90. That amount is what he gets when he's a non-resident. It is from a South African source, but again it's from a trust and it comes from a donation. Was there donation as the donor alive? Yes. Carl was the donor. Does Section 7 apply? Yes. Section 7 would have applied. Section 7.8. So he's not taxed on those amounts. So the South African interest, not taxed on those amounts, even though it's from a South African source. But then the local interest from foreign dividends, there was no donor here. So 23,000 times 90 over 365 is for the period that we're looking at. It is local interest, and he's a non-resident, so it is from a South African source. Don't now say, because it came from foreign dividends, that interest, it's no longer local interest. It is local interest, it's a local bank account. So that amount is from a South African source. So it gets included in his gross income. If you're a non-resident, then Section 10(1)(h) will apply. Alright, if it's not in the form of an annuity. And you should not have been in South Africa for more than 183 days. Okay, so please go and look at that, and then you would apply Section 10(1)(h) if anything else. Right, then the flats are sold. Right, last day of the tax year. And then you'll remember what happened. Paragraph 80 said that the trust is taxed on it, because he's a non-resident, so there's no effect for him. Okay, and then the rest of the information, they tell you after immigration he earned a salary of 300,000 from African Shoes. That's a foreign salary, so it's from a foreign company, so it's not from a South African source. He manufactured shoes at 80,000 there and sold it for 90,000 below its market value. Right, that's fine, but it's still, he's now a non-resident working in a foreign country, selling it to a foreign company, has nothing to do with South Africa, so now it's South African source. And then he received a dividend from African Shoes. He's a non-resident receiving a foreign dividend. So all of these, not a South African source.